Good morning, ladies and gentlemen, and welcome to the show this Friday. Friday, the 23rd of June, 2023. Thank you for tuning in. I'm glad to have you guys here. Well, you guys all want to know what's going to happen next. The greatest depression ever. Uh, Ever since 2008, we've been bringing demand forward. It's not going to save us because this time the consumers tapped out. So, the Fed is creating a Great Depression that's going to start very soon. Greater than the Great Depression in 1929, I believe, because the everything bubble that they created, these asset bubbles are popping right now at tremendous speed. And it's just a matter of time now until they're trying to see, they've overdone it, they've overcooked it. I think that at this point we're going to be heading in for a period of deflation. And that deflation is not going to end until they are forced to react. And then the consumers tapped out, so they're gonna have, oh my goodness, this is going to be rough. It says the U.S. economy has been saved time and time again over the past 2 decades by this one weird trick, bringing demand forward by lowering interest rates and lending standards so Americans can continue to buy stuff they didn't really need because the monthly payments dropped as interest rates were pushed forward to zero. Well, they're going to have to pull this trick again. They're going to try to pull it again, but this time the consumers tapped out. It says flooding the economy with low-cost credit doesn't just bring demand forward, it also juices speculative bubbles. And that's what's happening. These speculative bubbles are getting ready to burst. This is going to cause a major crisis. And I think we're right on the cusp of it. Right on the verge of it starting to happen right now. I think we're to that inflection point right now. It says the fantasy that inflation will plummet to zero and we can all go back to bringing demand forward. The reality is it's plummeting in demand. The everything bubble is popping, it says right here. Credit is tightening. Stimulus that worked in the past is no longer saving stagnating economies, and the higher cost of credit is drowning consumers and enterprises that have grown complacent over 20 years of continuous saves. In other words, I'm going to save you via zero interest rates and a tsunami of cheap credit. In other words, now we're going to have to pay the piper. Now, I'm going to tell you, after the economic crisis in Europe, what they did was they tried something. It was called austerity. And it was proven then that it didn't work. Austerity doesn't work. It just slows everything down and makes things worse. And that's what they're doing. That's what the Fed's doing right now. This is austerity measures. You can't do it in a debt-based system, or you're going to reap the rewards of austerity, which is destroying the economy. And that's what they're doing right now. And you haven't seen anything like this because this is the this is the big one, guys. This is the big one. Let's take a look now at the gold and silver. Silver is $22.38. It's up 13 cents on the day. But you notice something? It was descending upwards. See the green line there? That's the line we're looking at. It was descending upwards from the lows that they drove it down to. And you see when the COMEX opens up here, it was all the way up to, 22.70? Right? Right there, that green line. And look, when the COMEX hits, boom, now they're knocking it down again. It's down to 22.38. But what's really affecting the price of gold, silver, commodities, everything is going to really hit, I think, cryptocurrency, because this is one of your most speculative assets classes very soon. And when I mean hit, I'm not talking about Bitcoin going to the moon or anything like that. I'm talking about when the effects of austerity, when it starts to hit, because the system is drying up liquidity within the system at an astounding rate. We're in for hard times, is what we're in for. But on the other side of this, there's the masses of people out there. At a certain point, they're going to be like, we've had enough of this crap. So then how do they reverse these austerity measures that they're creating? Well, they're going to basically, really, what it comes down to, they're going to have to give people money to reverse this when it really hits hard. Otherwise, you're going to have millions and millions of angry, starving people. I mean starving, I mean you can't picture in your mind people in the United States of America starving. It's hard to picture in your mind because we've had such a long run of this credit binge that we've been on for the last 40 years. It's hard to imagine. But there's millions of people now that can't scrape $1,000 together to save their soul. Millions of people. We're talking tens of millions of people. And at a certain point, when they can't feed their kids, look out. And that's the point that's coming. And these government officials then at that point, they will lower interest rates back down again. They'll try to fix what they're creating right now, the problems that they're creating right now. In this fight against inflation, this phony fight against inflation is an economy killer. Moving on, taking a look at gold today. Gold is down it's up $10.30 at $19.24. Of course, the dollar's going to do great in this until it turns. But when it turns, it's the end of the dollar. But it's going to only turn when the problem is created. And we haven't seen the problem just yet. Cryptocurrency today, 1176. We're seeing Bitcoin at 30,735 and Ethereum has touched 1900. Dow Jones Industrial Average is off by 197 points today so far at 33,000. Well, now 203 points at 33,743. So it's down 203 points. Taking a look at crude oil. Crude oil is down 98 cents at 68.53. So, taking a look at this Dow Jones. Okay, let's pull back and take a look, you know. I don't think. I want the 5-year. Okay, the 5-year is better. What we're seeing right here is the COVID crash. At the beginning of COVID, that was the crash. And that was when they really came in with the big stimulus packages. You remember the stimmy checks and everything? This was when it was going up here because of all the stimulus. The market peaked. Since it's peaked back in 2021, November 1st, 2021, it peaked. And it peaked around 36,327. We're 3,000 below that right now, roughly. What you're seeing here is a long-term peaking chart of the market. Long-term, this is a long. What you're seeing right here is it is the classic dead cat bounce, and we're pretty much through the bounce. It's pretty much over. What we're looking at right now is a market that's getting ready to do a very bad things are looking to come to this market very soon. And I'm telling you guys, this is a classic pattern in the market. Classic pattern in the market. Do not be fooled into thinking that this is now a bullish market. Be very, very careful of this, you know. Taking a look at crude oil today, 68.53. It's off 98 cents today so far. So what we see gold and silver prices and crude oil prices reflecting this lack of liquidity that's being caused by a lack of credit being extended right now. This is the main driver of what creates liquidity in the system, is banks lending out. Of course, it's drying up right now, and you guys know that. Bonds and rates today, we're seeing a fall in yields on the U.S. Treasury bonds, especially on the long end of the yield curve. The 10-year is at 3.75. It's down 4.7 basis points. And the U.S. 30-year is at 3.82, and it's down 4.8 basis points. Or no, 4.5 right now, basis points down on the U.S. 30-year. So we can see the game they're playing. Look at how they keep the lowest interest rate of them all on the U.S. 10-year, because that's what debt's based off of. And so they've been keeping it lower than any other. All the others are higher. Everything's higher. Even the 1 month is higher than the 10-year. The 30-year is higher than the 10. Everything. In some places, it's really a lot. Looking at a 6 month, 5.41, and looking at the 10-year at 3.7. This is just classic, because debt's based. They don't want to. In a way, they know they're blowing up the system. They're popping the debt bubbles. But on the other side of that coin, that's just the way government functions. I saw this thing on YouTube, This guy, he had a piece of sheet metal, okay? And what he did was he says, this is the way the Army works, he said, in the ad. He said, so the guy come along, and there's a bolt on the sheet metal. He ground the head of the bolt off with a grinder. Then he drilled a hole. Then he tapped the screw back in with a tapping device. Put oil on it, tapped the screw. Right? And then he filled it up with after he ground it off, he drilled the hole, he filled it up with weld, then ground the weld off, and then tapped a new screw hole and put a new screw in. And he kept repeating that process of grinding the screw head off, tapping a new hole, welding the hole over, putting a new screw in. He did that about 4 times. I watched him do that on the thing real quickly, But it was just like, this is the way the government functions. It's like I heard yesterday, that there's a trash can that they had to buy. It's worth $300. They paid, I think it was $53,000 for it. This is the way our government functions. But they'll let you starve to death. But they'll pay $53,000 for a trash can that would be overpriced at $300. Anyway, taking a look at the dollar index today, we're looking at 102.98, and we're going to see this dollar index continue to tread upwards, being as they're getting so restrictive on monetary policy. I heard that the bank of BOE is going to raise interest rates by 0.50%. Unfrickin' believable. We're in for a lot more hardship, because we're in for hardship until the people squeal about it. Until it's like a pig, I mean, if you poke him with a big enough pin, he's going to squeal. And this is the thing. They're going to keep poking. They're going to keep making things hard for us until we say, hey, we can't take it any longer. They're going to keep it coming. We're being shafted left and right by these crooks. And as long as we remain quiet, they're going to keep going harder and deeper and worse. It's just going to get worse and worse. as long as the people don't say nothing. And to get right down to the nitty gritty of it, in the end, we won't have nothing. They're gonna take it all. How are they taking it? Now this is the thing. You guys need to know how they're taking it. They have the ability to print money. What we call money, what we use as money. I should specify what we use as money, Federal Reserve notes. They can create as many of them as they want. And then they can buy things that are really worth something. They can buy gold, they can buy silver, they can buy mortgage-backed securities, which is your houses, all packaged up. They package them up nice and neat into a bundle of mortgage-backed securities, and these are your mortgages, and they buy them up. The Fed buys it up. They can buy anything they want. They can buy land, they can buy anything. All this stuff they're buying is real. But what are they buying it with? They're buying it with crap that they create off a printing press. And now it's not even off a printing press. They just go to their computer and enter in a bunch of digits of this crap. And they buying it with, like, this stuff is real. It's World of Warcraft money. But right now, at this moment, they're creating an artificial shortage of this crap that they've been creating, where they're going to make it worth more through this artificial shortage. And they're going to keep this going until the people can't take it any longer, and then they're going to try to fix the problem that they created, because they're going to be in trouble then at that point. At that point, the people are going to be hollering and saying, hey, we're all starving. And then they're going to say, oh, no, we got to pacify you people. We got to pass. Okay, we're going to bring out UBI. Or we're going to do this, we're going to do that. We're going to send out more stimmy checks. And they just give you a little tiny taste, just enough to keep you from cranking, And then they go back to what they were doing again, which is enriching themselves. We're living in a totally corrupt society at this point. Anyway, I'm ranting a little bit again. Let's take a look here back at this doom loop. It says, sure, households that are bringing in $250,000 or more are doing just fine. And ain't that the truth? But how many of you guys out there watch my show are bringing in more than $250,000 a year? Not many. Most of us are stuck in the under $100,000 range. And some of us are just making ends meet. When things go wrong and you need some money, you've got such a tight budget, most of us now, that we have a hard time putting it together. But do they care? No, they don't care. They don't care as long as we're quiet and we don't say nothing. They will take us right down to our last penny and let us starve. And then if we still don't say nothing, they'll just keep going. Because they don't need you anymore. They got robots. They got AI. They got their brain implant that they're going to get installed next month or next year. That'll connect them to the internet permanently. So they'll have the internet floating around inside their brains. It's called a Neuralink. Oh yeah, it's coming. It's coming. They can't wait to get it. Anyway, listen, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode. Have a great afternoon. You guys are great. Really appreciate you guys out there who watch my show. And we'll catch you guys later, and have a great day. Bye-bye.